Professor of Economics at the University of Chicago. Look, I'm not going to use the word panic, but I am going to say that they have broken the glass on that button on the wall that says emergency, and this is now a full 5-alarm fire.
The hawks have spread their wings. It's now very clear that they have gotten religion on inflation and are doing what I think they need to do to make sure that inflation expectations don't get out of control. I think that really pushed them to move so much was not really the higher inflation print at the end of last week. That was broadly in line with their expectations, but inflation expectations moved up quite a bit. And that's really scary to them because once inflation expectations go up, it's very hard to bring them back down.
Right. However, they say the committee is strongly committed to returning inflation to its 2% objective. When you have to tell people, and they're not just committed, they are strongly committed. I mean, when you have to say that, methinks you doth protest too much.
Well, clearly, they made a mistake last year in talking about transitory for much too long. And I think to their credit, they said, yeah, we didn't get that right. And so now we have to move rapidly. They have to move more rapidly now because they didn't get it right then. But at least they've acknowledged the problem and are moving forward expeditiously, which I think is really important.
What do you believe is the neutral rate where we top out? Now, 3.4% I see is on the dot plot. That is considerably higher than it was a year ago. So we are looking at what number, do you think?
So, and they said that they might even get to 3.8 or maybe close to 4% in 2023. And so that's significantly above what they consider neutral, which is probably in the range of around 2.5%. That's very much an art rather than a science of figuring out where that is. But they know that they need to move significantly above where they think neutral is in order to bring inflation down.
And the R word, recession. I mean, I know it's not inevitable, and I know it's not baked in, but are you prepared to say it's more than likely?
A significant slowdown is very likely, and I think the numbers they put out in their projections are a little bit too rosy. They have the unemployment rate only going up to 4.1%. It's at 3.6 now. I find that hard to believe that it's only going to go up that much. I think it's going to go up significantly more. Whether we'll have a formal recession of 2 quarters in a row of contraction, not so sure about that, but that we're going to have much slower growth and I think a much higher unemployment rate. I think that's certain.
So how long, one of the questions people continually ask, and I think this is because, A, we haven't had a bear market, a proper bear market for many years, and B, the market falls that we saw in the pandemic reverse themselves within a matter of weeks. How long, from experience, do you think it's going to take to bring inflation down to something that the Fed will consider acceptable?
I think it's going to be a while. This is not something that's happening in the next 6 months. I think even by their own projections, they still see inflation quite elevated by the end of this year, and it's really only by the end of 2023 that it comes close. So I think you're going to see inflation come down significantly from the 8% or so that we're at, but at still, even if it's half of that, that's almost triple what it's been over the last decade, and double of what their goal is. So I think it's going to take a while. It's going to take at least a year, probably more, for it to come close to 2.
The Fed's credibility is on the line here, hence that phrase in the statement tonight, strongly committed. Isn't the risky area once inflation gets down to 4.5%? What do you do then? I mean, Powell has said, basically, we'll take no truck, we will push on. Is that realistic to push on, to get down to 2% if unemployment is rising and the economy is stagnant?
This is precisely why they've got to move really fast now. He's used the phrase expeditiously. The unemployment rate's below 4%. The economy is still doing okay. This is the time to be raising rates significantly, because if he raises them much faster now, that probably means they don't have to raise them quite as much down the line because inflation expectations will not become unanchored. And that's the game that they're playing. Move quickly now, even though it's going to take a while for the inflation to come down, but then people will believe that it's going to come down, wage demands won't stay as high, and that'll make it easier to have a soft-ish landing, maybe just a very significant slowdown rather than a formal recession.
Randall, thank you for helping us understand from Basel exactly what's been going on. I'm grateful for you tonight.